Good evening and welcome to another edition of Resource PNG. Tonight we have a special feature presentation from the International Finance Corporation. We also have repeats of our earlier interviews with the Director General of Trade European Union as well as the CEO of the Bank of South Pacific. The International Finance Corporation is a member of the World Bank Group and encourages sustainable private sector investment in developing countries. We shall have a look at a presentation by the country economist for the IFC in Papua New Guinea and Solomon Islands, Tim Bullman, who gives an analysis on how the minerals and resource sector has affected our local economy. Let's take a look.
As an economist, we're restricted to the world of the numbers and information that we're given by central banks and treasury agencies. So what I want to do here is talk through a few slides that summarize what those numbers are saying, and then afterwards we can have a conversation about what people are actually experiencing on the ground, how PNG's economy is transforming. Right now, you've got to feel very privileged to be in a job like mine, of looking at Papua New Guinea through these years. This is an economy that's going through a substantial transformation from one that's predominantly subsistence agriculture to what will in the future be a solid middle income, or could well be a solid middle income country. As an economist working for an organisation like the World Bank, oftentimes you just feel like a spectator who every so often gets to nudge things in the right direction, but still that's an exciting opportunity. Unfortunately, I'm going to have to keep on going back and forth like this. So the storyline today is one that's a little bit similar to the one that we would have told about a year ago, that PNG's economy is booming. It's transforming the resource boom, the boom in global commodity prices is transforming PNG in important and very substantial ways. At the same time, it's proving a challenge to policymakers here, as it is to policymakers in many other countries. Right now, though, things are beginning to change. The drivers behind the current boom seem to be reaching their peak, at least for the moment. While this means that some of the pressures on the economy at the moment are likely to wane, it's also going to bring new challenges, particularly for public policy. And there are significant risks. There is significant scope to turn this boom into a transformation in people's living standards, but there are also risks that many countries which have gone through such commodity-driven booms have faced in the past. So that's what I want to talk about. Now here is the long-term perspective on what's driving this. This is the third commodity price boom since World War II. Unlike the previous two, during the Korean War and during the early 70s oil price crises, this one is much more substantial in terms of the range of items it's affecting, and it's also lasting much longer, even post the crisis of 2009. Now looking at PNG's economy, also taking the long view, we see a change in the type of growth. What we saw in the 2 decades after independence was a series of short-term, short-lived booms, followed particularly through the mid to late 90s by a series of macroeconomic crises. Each of the previous growth spurts were associated with the opening of new mines. What's different this time, what's different to the last 5 years, is that existing mines, if anything, have been waning in their production. What's been driving this has been investment in future resource production, and then a much larger series of spin-offs that's flowed from that. What's particularly exciting about this boom is that it's lifted average GDP per capita well above the levels it was at independence. Here, this grey line is GDP per capita indexed to 100 at independence in 1975, and it's now about 15% higher than that. Of course, these averages don't tell you much about the distribution, and as anyone in Port Moresby versus somewhere in the highlands or in various regions of Papua New Guinea can tell you, it's likely that that's much less equitably distributed than it was at independence, that income. Now, what's remarkable about what's been happening in the last half decade is the breadth and range of sectors that have been growing so strongly. Now, of course, given that this has been driven by the construction, or in large part in recent years has been driven by the construction of the PNG LNG project, the construction sector has been making very large contributions to aggregate GDP growth. But that predates the approval of the LNG project. You can see going back into the 2007-2008, construction was also making an outsized contribution to aggregate growth. I like this graph as well because it shows you how much the economy transformed in the last decade. You had the first 5 years where average growth was barely 2%, so well less than population growth, versus the second half where it's not just construction that's growing strongly, but all these other sectors, wholesale and retail trade, communications. Where's communications? Transport, storage, communications have also been growing very strongly, and that's lifted average growth rates to around 7%, which means it takes about a decade for income levels to double if you sustain that for a decade. Now this this production growth, this boom in the economy has been funded by foreign direct investment, and we'll come back to how it's not been driven so much by domestic sources of finance, or at least domestic borrowings. And it's been raising output in sectors which are quite distant from the natural resource sector. I think the strongest example of this is what's happened with telecoms and telecommunications with the Digicel investment. Now there are about 30,000 people who are working as Digicel credit resellers, who obviously weren't doing that 4 years ago. What's also particularly exciting is that you're seeing a new breed of Papua New Guinea companies emerging. These are Papua New Guinea companies which are not like companies you'll find elsewhere in the world, which have emerged in response to the particular social conditions and land owning structures and are connected to particular resource projects, but are not necessarily part of resource production directly. So these are the landowner companies like Trans Wonderland, National Catering, IPI, and so forth. Final point I want to make is that even after a decade of this structural transformation, half of PNG's economy is still coming out of natural resources. Agriculture is still about a third of the economy. Mining, including oil and gas, is another fifth. Now, this boom, of course, has been outpacing the supply capacity, as I'm sure everyone in this room well knows. Supply constraints have been hit. There are only so many concrete mixers and crane drivers that there are in the country. And after a while, you just bid up the price of each of those services. This has translated into rising consumer prices, hurting especially the urban poor, the people who are most tenuously connected, who are in urban areas but are tenuously connected to the formal economy or to the cash economy, and so aren't benefiting also from the increase in wage growth. In the last half year, inflation seems to have moderated a little bit. That's moderated from something near 10% to something near 8%, so still quite substantial. But there is also a risk that this inflation is becoming more entrenched. You can see this by looking at workers' wage expectations, and they seem to be ratcheting higher. People are expecting wages to increase at a growing pace, which then pushes up costs, which then drives future inflation. So how have policymakers been responding to this? The primary tool, let's stay on inflation, the primary tool for controlling inflation that the central bank's been using has been the appreciation of the exchange rate. The kina's risen by about 25%. So the kina here against the US dollar is this black line. It's gone from, when I started on this job, you could almost divide prices by 3. Now you divide them by 2 to get US dollars. This is the strongest kina exchange rate since 1998, since commodity prices collapsed with the Asian financial crisis.
That was the country economist for the International Finance Corporation, Tim Bullman. Stay with us. After the break, we have more. Thank you for staying with us. In this IFC special edition, the country economist for PNG and Solomon Islands, Tim Bullman, will give a rundown on budget spending.
Part of this, of course, is a US dollar story, but even when you abstract from the US dollar story and you look at changes in relative prices, the kina is much stronger. In fact, it's strongest since 1994, since the kina was depegged. That's what you see in this real effective exchange rate chart. So this impacts inflation by impacting, or it should be impacting, the cost of imported items. Earlier estimates suggest that for each 10% appreciation, that should reduce inflation by about 5 percentage points over about 18 months. Inflation this time has gone from about 10% to about 8%. So that either speaks to the mismeasurement in the CPI or the extent of price pressures that existed a year or two ago. Now, why has the central bank been using the kina and not the other tools of monetary policy, like the policy interest rate or minimum reserve requirements or so forth? One reason is that banks are flush with liquidity, and people in this room can speak to this better than me. Much of this being liquidity that's flowing from the government's deposits with banks. This graph here shows you the government's, both subnational and the central government's deposits in commercial banks and in the central bank. So the takeaway there is that the government, or the fiscal authorities anyway, have been adding to this issue of excess liquidity in the banking system. Meanwhile, when it comes to lending, this liquidity isn't generating a surge of new loans, which could become inflationary. Lending, total credit outstanding, has actually been slowing through the course of this boom. And it's been slowing across a range of different sectors of the economy, which is what this graph shows you here. So that's part of the reason why the central bank is using the exchange rate as its tool for controlling for controlling inflation, rather than the other tools of monetary policy. What about fiscal policy? Government revenues have grown with the boom in the overall economy. There's an argument that perhaps with different money tax regimes they might have grown a little bit faster. But already you see revenues growing by 50% in a couple of years. That's not due to, and that's largely due to more revenues coming out of the natural resource sector. The government's capacity to, or willingness to spend that, hasn't kept pace with the growth in revenues. Recurrent expenditure has been growing less rapidly. And instead, the government's been transferring or increasing the size of its development budget. This graph here shows you recurrent spending adjusted for inflation versus development spending. And you can see that the share of the budget that's going to the development budget has been increasing. Now, the issue with that is that many countries find it very difficult to spend their development budgets, their capital budgets. Development budgets tend to be full of new projects, each of which have to be designed and implemented specifically. And you often find that disbursement rates on development budgets are much lower than on recurrent budgets. What about this year's budget? There are two ways to look at this. You can look at this budget from an economically pure perspective and say, well, this year the budgeted expenditure is growing by the fastest rate in a decade, by more than a quarter, and this is much less than the budget than the government could have been increasing expenditure under the medium-term fiscal strategy. There's another way to look at this, which is that this is an election year. We have to think about what's politically feasible. And this is a less stimulatory budget than the 2002 budget. Overall, we see that the government has allocated more resources to a number of its development enablers that are listed in the medium-term development plan, which we see here. But the story can be a little bit mixed. The headline program, of course, was the tuition fee-free education subsidy. But once you take that out, the amount of money actually going to education seems to have decreased once you take out the subsidy. Although there's been a little bit of a reallocation across education, with more funds going to the actual service delivery end of the education budget, teacher salaries, functional grants, and so forth. The health budget decreased overall, and it's unclear how the waiver of health fees will be funded. But then there is a flip side to this as well. More resources went to law and justice, and not just for the law and justice needs or security needs associated with the elections. And of course, there was a substantial injection of funds to the election authority. Let's look forward. This slide is kind of the baseline forward-looking story. The story here is that the non-mineral economy is likely to slow somewhat over the coming years. The PNG LNG construction is peaking this year and early next year, and as that winds down, that will subtract from aggregate non-GDP growth. Meanwhile, the weaker kina prices for commodities, so international prices are weaker, while the stronger kina means that local cash crop growers, for example, are going to receive fewer kina for a given kilogram of coffee or cocoa. So that's going to work through to real incomes, and hence to retail spending and so forth. On the flip side, there's a considerable pipeline of substantial new resource and non-resource mega projects. These projects are working through appraisal and planning, but haven't yet reached approval, you have to attach some probability to some of these projects being approved. Which particular ones and how many, of course, is going to be dependent on a range of both external and domestic factors that we'll come to. Looking forward, the thing that personally concerns me most is this issue here, and it'll be interesting to hear what people think about this. At the moment, a lot of jobs have been generated through the LNG project and through spin-off associated investments in new supply capacity of firms supplying the LNG project, for example. This means that a lot of people are getting access to the formal economy or to the cash economy for the first time and are gaining experience in those sectors. But we know that this is transitory. In a couple of years, the LNG construction will wind up and the LNG plant will go to 100 full-time permanent jobs. So these people will be looking for other opportunities. Where they're going to find them, we have to start to tell a story about other sectors of the economy which are emerging, particularly combining what's happening with some technological innovations and with new business practices such as the landowner companies.
Stay with us for more after the break. Good to have you with us. To end this special presentation from the IFC, we shall have a look at what practical steps PNG can take to create sustainable development.
What will be particularly interesting, for example, is how mobile banking changes people's behaviour around cash and access to the cash economy. Finally, in terms of the outlook, inflation seems likely to remain relatively strong. By that I mean more than 5%, if less than 10%. While there's a lot of new supply capacity coming on stream, and that's already pulling down some prices, this economy is undergoing substantial structural change. And substantial structural change tends to mean higher inflation overall. And as we saw, inflationary expectations seem to be ratcheting higher. Okay, what about the risks? Two sources, of course, external and domestic. The most important external source is what happens to commodity prices. Commodity demand and prices have retreated from the peaks of about a year ago. And the 25% appreciation in the kina against the US dollar, of course, further reduces how much PNG nationals are earning. The outlook, though, is for commodity prices, if to come down from recent peaks, to still remain high, at least compared to mid-decade. But the outlook is also for them to be much more volatile than they were, say, in the 2000s or the 1990s. This is partly due to the great uncertainty around the global economy, think Europe, and partly due to other structural factors that are emerging. And we know that PNG is unusually buffeted by the volatility in commodity prices. So this graph shows you how volatile government revenues are and GDP is. And this can be linked to the exposure to the commodity sector. Of course, PNG is more diversified in terms of the countries it trades with than some of the other countries on this chart. The government's taking important steps to try and manage this volatility. Primary amongst them, of course, is the Sovereign Wealth Fund, which will ensure a smoother stream of revenues coming out of the natural resource sector into the government's budget. And that should help improve budget planning and execution. What about domestic sources? Firstly, the extent to which this point's been made in the community seems to vary. The resource boom and the impact that's had on government revenues of the last 5 years is unlikely to be repeated. Substantial revenues from the PNG LNG project are only expected to arrive in the government revenues late this decade. Of course, some will start flowing with gas in 2014, but the real most substantial share of revenues will come later in the decade, or the beginning of next decade. Meanwhile, the other projects which are in the pipeline are only likely to start generating substantial revenues for the government as well later this decade, once their capital costs have been paid down. So what this means at the same time as Octedi, for example, reduces its production or becomes less profitable, and as the oil wells stop producing, is that there's going to be some compression in government revenues. This is going to happen at the same time as service delivery costs, population size, and most importantly, people's expectations of government continue to increase. So you have these two pressures going in opposite directions. How to solve this? As the Prime Minister said in August, I think, is PNG needs to spend better rather than necessarily spending more. This involves both better budget planning and execution, and there are moves to do this through, for example, taking longer-term capital budgets and through the Sovereign Wealth Fund. It also means reducing leakages between Waigani and the end recipients of government services. Now, the best way to do this, if you look at international experience, is to find PNG solutions or institutions that reflect Papua New Guinea's conditions and existing institutions, both formal and informal institutions and practices, that are going to build a stronger culture of accountability and governance. And this is going to be an incremental process. There is scope to maintain or even increase slightly real per capita spending growth in mid-decade, like 2014, 15, 16, when revenues are particularly compressed, by moving to small temporary deficit financing. If you look at government debt levels, focus first of all on the red line, which is the line the government tends to present, debt levels are sustainable and the dynamics generally positive. When you add in a whole bunch of contingent liabilities, for example, the debt the government has to pay for its equity share in the LNG project, or the unfunded superannuation liabilities, the overall debt level rises substantially, but it's still assessed overall to be sustainable. Of course, all this assumes that the LNG project is successfully implemented. So there is scope to shift to deficit financing. That deficit financing should be looking to sources of funds that are low cost and that work to help develop domestic implementation capacity. And another risk that you don't see discussed so much is population growth. Last week, the government released the 2011 census results, or preliminary results. The population is now, or at least on Census Day in 2011, was just over 7 million. At current growth rates, it's likely to be about 7.25 million a couple of months from now. It's growing by 2.8% apparently, and most of that growth is occurring outside urban areas, in rural areas, areas where education and health services are distant and particularly costly to provide. Finally, the deep structural issues. The downside to PNG's natural resource wealth is that it seems to be associated with enormous institutional challenges. PNG seems to be overcoming some of these. It's generated a climate that's attracting investment. If you look at a map of mining current or applications for mining exploration for Papua New Guinea and compare that with Indonesia, PNG is covered on the landmass and much of the seabed as well. On the Indonesian side, I don't think anything's happening, and it's the same geology. That speaks to the difference in the institutions between the two countries. PNG is also developing institutions to ensure that its wealth supports or is transformed into a stable macroeconomy. Again, think here of the Sovereign Wealth Fund. Now, of course, the issue is then to avoid the deeper resource curse and the impact that has on political economy. How to ensure that political leaders have the incentives to turn the nation's wealth into long-term, broadly based and sustainable development, rather than developing institutions that allow leaders to turn this wealth into short-term private rents. Finally, there are upside risks as well. There's a substantial pipeline of projects. More of these projects might be realised more quickly than we currently think is the case. And I think most interesting is this group of emergent Papua New Guinean businesses and the growing reach of the cash economy, accelerated by new technologies to do with mobile phones, that's becoming the basis of PNG's emergent middle class and of PNG becoming a middle-income country by mid-century.
That was a presentation on the work of the IFC. Stay tuned for more after these short messages. Thank you for staying with us. Here is a report by Deli Bagu on a media brief about International Finance Corporation.
Visiting International Finance Corporation Director for East Asia and the Pacific arrived in the country on the 11th of April. Sergio Pimenta is in the country to acquaint himself with a better understanding of PNG and its development needs. He travelled up to Tabubil in the western province the following day to get a feel of both the rural and urban sides of the country and establish how IFC can assist in development. It's the first time Mr. Sergio has come to PNG in his capacity as IFC Regional Director. 1 year after officially opening its office in PNG, IFC, a member of the World Bank Group, continues to support small and medium enterprises by aiding access to finance and training. Mr. Sergio said he came to follow up on progress of IFC's activities in the country.
We have, as you know, opened our office here about a year ago when our CEO came and did the opening with Carolyn. And at that time, he did indicate that IFC would be doing quite a lot of things in this country in terms of helping small and medium-sized companies. And so I came to follow up on that, and I'm very happy to see what fantastic progress has been done, and that there's been a lot that IFC has been doing in 1 year, which is really a great achievement.
He said that the private sector is a critical ingredient in helping to create jobs, deliver services, and develop infrastructure. IFC has two approaches. The first is working with financial institutions to assist smaller entities, and the second is providing financing directly for medium-sized enterprises.
Both the rural and the urban side of the country and the development needs in the different parts. And working with my colleagues here and with our colleagues and friends from the World Bank on better assessing what are the needs, and so that we can better deliver and better support the country.
IFC sees a lot of potential for expansion in PNG.
For instance, to work on SME tax simplification to make it easier for businesses to comply with tax. We are also working on alternate dispute resolution, which is a program that IFC pioneered in Papua New Guinea, which is now spreading throughout the Pacific, which is helping to resolve commercial cases in the courts. And last year alone, or in the last 18 months, has resolved around $7 million worth of cases, which means that businesses, many of them very small businesses, can get on with their lives and not hold their cases held up in court. We do work technical assistance with BSP, for instance, in distributing financial services to everyday Papua New Guineans to enable them to have access to bank accounts. There are many other programs, but all of these programs, so we have the investments, which are around 200 plus million, and then on the advisory side, we partner with the likes of the Australian government, the New Zealand government, and others to deliver our services, basically on a advisory services basis. So it's our contribution, if you like, and that's where the profits of IFC often come back into countries like PNG.
In addition to the lending program, World Bank and the national government expect to train 300 small businesses and mentor 150 business owners and 300 women entrepreneurs over the next 5 years.
Do stay with us. We'll be back right after this. Welcome back. Resource PNG has spoken to many representatives from different organizations since the beginning of this year. Here's an interview that we had done earlier this year with the Director General of Trade, European Union, Peter Thompson.
Good evening. I'll be your host tonight for the Resource PNG program, and we have the pleasure of introducing the Director General of Trade from European Union, Mr. Peter Thompson. Mr. Thompson, welcome to Papua New Guinea.
Thank you very much.
Mr. Thompson, for the benefit of our audience, could you please explain what European Union stands for and what brings you here in the country this time?
With great pleasure. First of all, European Union is a collection now of 27 countries. It started as 6 in 1957, 450 million consumers, a high level of regional integration, a common currency with a large number of the countries within the EU, operating together in trade, competition, and a large number of areas. We have a relationship with the rest of the world. We trade with the rest of the world as a bloc. We are the biggest trading partner. So, European Commission, which is the institution I work for, is like the executive arm of the European Union. It's a civil service. We deal with issues like trade policy, development policy, competition policy, and the like. And I'm here as the director in DG Trade, responsible for, amongst other things, our relationship with ACP countries, and I'm delighted to be back, I might say.
Thank you, Mr. Thompson. Trade partners with EU is a very important point you mentioned today. Could you emphasize on that as what are the trade agreements or what is the key trade agreement which is of interest to PNG businesses to be doing business in import and export with EU countries?
Sure. One of the most important things about our relationship is it goes back 30, 40 years. We have something called the Lomé Convention, and that was succeeded by the Cotonou Convention. It's a relationship between a collection of African, Caribbean states, 77 of them to be exact, of which PNG is one, and the European Union, and that's a long-standing relationship. Now, in trade, we had a system whereby the EU would open its markets to ACP countries, but there was no requirement on the ACPs to do anything on their side. Frankly, it didn't really work. I mean, in the late 90s, I think there was a common decision by both sides that we need to do something to help ACP countries become less marginalized in the world, large growth of emerging economies, India, Brazil, and so on, particularly China. How can we ensure that liberalization would actually help these countries? So what we've done is change the relationship, and that's the nature of what we're involved in here, from this unilateral one to one which is bilateral. So now, in 2007, we reached an agreement with Papua New Guinea and actually at that time with Fiji, with a view to opening on both sides. Now, we're big and we're developed, PNG is small and still very much a developing economy. So it's an unequal opening. The EU opens its market 100% to all products from Papua New Guinea without quota and without tariffs. Tariffs are the taxes that you would pay on the imported products. That is unprecedented, by the way. I don't think there's any other developed economy that does this. At the same time, Papua New Guinea opens its market to the tune of 80+%, and then keeps a certain number of products protected by having reasonably high tariffs on them, and that enables a relationship to develop over time. Now, if you want me to go into the details on the actual interim agreement that we have, this interim economic partnership agreement, I'm happy to do so, of course.
And the very key points you have mentioned in the bidirectional trade during our conversation just now about duty-free and quota-free access of PNG exports or PNG trade into EU, and you mentioned that this is unprecedented, this doesn't happen anywhere in the other developed countries. This is something of very great interest to our PNG businesses, and we would like to know more as how a PNG business can export and what benefits does it get to exporting to EU countries rather than Americas or Australia's, or so what, how does this agreement benefit PNG business as an exporter?
So we're talking about something called market access. So if you wish to export, I don't know what product we're talking about, let's say canned tuna, to the United States, you would have to face some kind of tariff protection in the United States. I don't know the figures off the top of my head, but I'm pretty sure they're not zero. Or if they're for zero, they're for a limited quantity. So basically, there is some measure of restriction on the exports of a particular product to the United States, or to Japan, or to China, or to anywhere else. What the EU has done in this special relationship is said, no, we will not have any quotas and we will not have any tax, and that means that the PNG exporter is free to export unlimited quantities of whatever product it has to export to the EU.
That's fantastic. That's phenomenal for in terms of assistance of being able to participate in EU as a trade, as a bidirectional trade with PNG. Director, could you please emphasize as what is the future of this agreement? As yes, the PNG businesses can do now from 2009, as you mentioned, but what is the future of these relationships?
Yeah, the situation is that we, in 2007, when we actually reached the agreement, we were at a difficult phase because I'd mentioned to you earlier that we were working under an old relationship which was a sort of one-way street, and changing this into a bi-directional relationship, a two-way street. That happened on the 1st of January 2008. This was written in the treaty between the EU, the European Union, and African Caribbean countries operating together. Okay. We needed to somehow manage that change, and we've decided to do it in steps. So in the case of the agreement with Papua New Guinea, it's called an interim. Interim doesn't mean it's going to stop. It means it's a stepping stone. So basically what we've got in the case of this particular agreement is something that concerns goods, the famous duty-free, quota-free access for us, and some opening for EU goods into Papua New Guinea. Good. What do we do next? Well, one of the ideas would be to say, couldn't we look at the area that's really the lifeblood, and if this is not mixed metaphor, the backbone of any economy, which is services, for example. And there, what do we mean by services? We mean transport, we mean infrastructure development, we mean finance, we mean telecommunications, we mean dredging, one of the industries that actually the Europeans are doing for your LNG pipeline, for example. Even culture and education can be considered a service. So if we find a way of opening a new chapter here, we can do that. We can add to that investment. The EU has just recently come through what we call a new treaty, the Lisbon Treaty. That's a framework within which we operate 27 member states together. And under that, the EU now has responsibility for negotiating areas concerning investment. So we could mutually negotiate something with regard to the rules of investment. What would be the advantage for the Papua New Guinea private operators here would be that they would have, at the end of it, a more stable regime in order to make their investments, in order to facilitate the investment here, because that's crucial to the future. And there are other areas which concern fisheries, which concern development cooperation, which concern sustainable development. There are all kinds of ideas out there. Lastly, and not to try and in any way sink that, the question of what we call regional integration becomes important. We're the granddaddy of regional integration. We have, as I say, our famous 27 member states operating together. In the CARIFORUM, the Caribbean economies operating together, we have a number of countries who've said we'd like to learn from that process. Now, the degree of regional integration in the Pacific is, of course, not as far as CARIFORUM, and certainly a long way from the EU. But the degree to which you cooperate through the Pacific Island Forum or other ways is something that would mean that we can attract in other Pacific Island ACP states.
Excellent, that's fantastic. So in future we can look forward to the agreement expanding to services sector or to development cooperation sector, which will be very vital for the growth of the country, and that is a fantastic initiative taken by European Union on this. Director, as one last point I would like you to as you mentioned in the previous part of the conversation, is liberalization. And this is one thing of very key interest in the partnership agreement as well. It mentions that PNG is committed to liberalize 88% of its of EU imports. Can you emphasize of how this liberalization helps PNG?
Yeah. Let me first of all give you the bad news. The bad news on this is that very often when you talk about liberalization, it means to an industry somewhere, heavens, that means that I'm going to be driven out of business. And it's an understandable fear. The fact of the matter is that 99.9% of the time, it leads to greater economic growth, it leads to diversity in the economy. And most important of all, it increases competition, which then reduces costs, which then feeds into other areas. So, liberalization, when done intelligently, is a very good way of reducing costs, of introducing competition, of helping the economy. So one part stimulates the other. If you import chemicals, which you may be dependent upon, or machinery, which you may be dependent upon, if you reduce the cost of those, in your economy, you've actually helped generate business elsewhere, and that's precisely what we're after.
That was an interview with the Director General of Trade, European Union, Peter Thompson. We'll be back after the break. The Bank of South Pacific has the largest banking network in the country. Here is a rerun of an interview with BSP's CEO Ian Klein about what the bank's doing and how it's handling growth in the resource sector.
Good evening. Today I have with me Mr. Ian Klein, the CEO for Bank South Pacific. Good evening to you, sir.
Good evening. It's a pleasure to be here.
Thank you. Thank you for joining us on this Resource PNG program. I'll be your host for today. Mr. Klein, would you like to address the audience and let us know about what do you think are the immediate challenges for BSP, especially as Papua New Guinea is facing an economic boom in the activity of resource sector?
Well, as we all know, Papua New Guinea is an exceptionally lucky country through our natural resources. And one of the challenges we have as a country is actually many of these projects are still not delivered. And there is a huge expectation in the community about the royalties and the benefits that are coming. However, PNG first has to deliver LNG to give the country the type of credibility we need. And on the other side, after 2014, first gas, that's when the country really starts to generate income. And the challenge for the country is one of infrastructure, because with all these projects, these companies, they need access to electricity, to roads, to power. And whilst we're already challenged today with these future very, very large projects coming up, PNG simply must find a way to invest in very much needed infrastructure, not just for these projects, but for the people at large.
Very rightly pointed out are the infrastructure and expectation challenges for the country, which leads me to the next question, Mr. Klein, is what do you think are the initiatives taken by BSP in implementing banking facilities to meet the resource sector demands?
BSP is the largest bank in Papua New Guinea. Clearly we are the large Kina lender. So many of these projects, when they're first financed, are financed in US dollars. But when the real challenge about taking banking up into the rural communities and resource communities occurs, then really BSP is the one with the capability and today actually the technology to deliver. We've been talking to Exxon for over 2 years about putting a bank up in the Hides area. Unfortunately, one of our competitors, who is a lead arranger, shall we say, used some influence. And they are putting one up there, but in reality BSP is prepared to go up into these regions, but the type of banking service we will take should reflect the true economic activity of that region, because you can't build a massive branch in a very remote area which costs many millions of kina and of course lose money.
Mr. Klein, you rightly touched upon technology as the key factor, and I would like to lead you to the other, as a more detailed is what is the technology initiative or ICT initiative of BSP to meet this demand?
BSP has been through 3 years of transformation. What I would describe BSP as being 3 years ago was perhaps a 1980s bank in a 1980s economy. So we have undertaken massive number of projects. In fact, in 2011 we had 183 projects going on, and if you look at the BSP of today versus what we were 3 years ago, it's a massive change, and a change that many people would not have expected. Part of that change is linked to technology, and the country as a whole has benefited from Digicel, from improved telecommunication availability, and therefore there now are creative ways that a bank like BSP can actually take cost-effective banking truly into rural and resource communities. And that's using mobile phone banking, wireless FPOS, ATMs, etc., because that is true cost-effective banking. And one of the big challenges we have in this country, of course, with law and order, are the risks of moving cash. And BSP's strategy very much is taking electronic banking into rural communities. In terms of technologies, in the next few months we will be coming out with some truly innovative technologies. We have done a pilot with Octedi. We went down the Fly River in their boat and we used a tablet computer to open accounts in very, very remote areas. So we're now able to open accounts within 10 minutes in very much rural and resource communities, and therefore take cash out of the equation. We're also running a pilot up outside Kokopo with Agmark, where commodity buyers are actually using wireless FPOS, and the growers have BSP Kundu accounts, and when they sell their product, they're immediately paid using a wireless FPOS real time.
That's a fantastic initiative of BSP using creative technology to take it to the rural sector, which I would like to ask you further on this, Mr. Klein, is how do you, what are your plans of educating the financial investors of the rural sector, of the sectors which are remote from here, as they land in a community using BSP?
Well, every major sponsor of a natural resources project has the number one obligation of local content, of giving back to the communities in which they operate. So BSP is working very much with the likes of Barrick, Exxon and Newcrest and all of these companies on how do we take real banking services into the communities. And we have container branches, as I say, we have wireless FPOS. So we are working to see how we can creatively go in, and in terms of education, once you have access to a banking facility, that you use your Kundu card. We have put together material, and we're working with the World Bank amongst others for educational material to go out there and teach people about basic banking.
Now I'll take the conversation to a different domain in terms of investor relations. We would like our audience to know as what is the percentage of BSP investors that are directly involved in oil, gas and mining sector?
Well, BSP's major shareholders clearly are IPBC. They continue to have 18% of BSP, and BSP pays a very, very large dividend every year to IPBC, and that goes back to the government. The majority of our shareholders are the super funds, NAS Fund, Number One Super, Credit Corp, MRDC, Kutubu landowners, PNG Sustainable Development. All of these institutions have a role to play in basically resource areas.
Excellent. Mr. Klein, you have a fantastic Go Green campaign which we see around the country. Could you please highlight your motivation or your initiatives of BSP towards going for this campaign?
Well, some years ago, BSP unfortunately had quite a violent robbery in Biala, and it was on my first Monday as CEO. So it was quite shocking in terms of what occurred. We had a number of meetings with the communities, and what came back was the perception that BSP was not part of the real communities in which we were operating. So we sat back, we do listen. Of course, we're a very large organisation, so we sat back and we thought we need to give back to the community. And you know, people can talk about fees and these issues, but a fee is a cost of providing a service. So we came up firstly with our social branch project, where we give 20,000 kina to each branch. BSP staff actually have to participate in the work that's done, and it goes through a very professional approval and monitoring process. And in 2 years, we have delivered over 70 community projects to branches all around the country. Then we were looking at, of course, the issue about environment. We want to have a very healthy environment for our children and for the youth, for the future of this country. And as the Green Bank, we signed up. We are the Pacific partner of Clean Up the World, which is a very big organisation run out of Australia. We do our school cleaning and community cleaning projects, but we do many, many more. The former Miss PNG, Rachel James, is very active on environmental. She's around the country giving lectures in schools and to groups. And so we have a very, very clear campaign. It is just not one-off in terms of once or twice a year. It's actually ongoing. And we also have the same campaign within BSP to look at how we do things and can we do them in a more environmentally friendly way.
That's a fantastic approach of taking your initiatives to the community and giving it back to the community, as you rightly said. Would you also highlight about, our audience would like to know about the Lay Oncology project or One Laptop per Child project, which initiative BSP has taken?
Well, the Lay Angau Hospital has been the recipient over a couple of years of our community projects. This year our 3 branches in Lay have pooled their resources and we are doing a complete renovation in the cancer ward. I think as has been seen from the press, this is extremely well received, and there are many companies like BSP, like Digicel, Exxon, who are giving back to the community, but BSP, as obviously one of the larger and leading companies, truly believes that we must lead by example. In some of the other projects, because obviously I have seen the list, we are doing up health centres in very remote areas, we're doing up classrooms, we have police stations, so it's a very diverse range. And we also do this not just in Papua New Guinea, we do this in the Solomon Islands and Fiji.
Excellent. Mr. Klein, you briefly touched in your conversation about the container branch aspect of BSP, which is of particular interest to us. Could you please highlight for our audience as what this initiative is about?
Again, when I took over BSP about 3.5 years ago, we had a one model serves all service model, and people would complain about crowding and lines and waiting times, etc., because we really didn't look at each customer segment and come out with a strategy on how to serve them. And when you look at the retail, of course, mass market, we have now 780,000 accounts in BSP. And if people are just going to line up at a branch, we can't service them. So this is why we've now been very aggressive in ATMs. We have 230 ATMs around the country today. We have nearly 5,000 FPOS around Papua New Guinea, and our strategy is to roll out these in a far more aggressive way. And as I say, even putting them into the main trade store in remote villages. And this is a commitment the BSP is already delivering. When we looked at the branches, many people in Papua New Guinea are low-income earners, and when someone comes to our teller, we actually lose 4 kina per time we serve them, because the cost of maintaining 38 branches, 20 lose considerable amount of money, is very, very high. If you look at the history of the PNGBC, how they expanded their branches, often perhaps a provincial governor would like to have a very large building built in a town. They would come to the PNGBC and say, would you please build one, and then they would, and finance it, of course, and then they would come back and say, could you rent it? So we have some very, very large branches which are actually exceed the size of the economic activity in that town. So what we're doing, we've created a container branch, and the first one is in Motokia, which was our pilot. So the idea is we will look at expanding our branch network, but we will first put in a container. And the container will then, we will look at the business volume. If the business volume exceeds the container needs, and we're talking about 2 or 4 40-foot containers put together, then we will build a more permanent branch to reflect the activity. If it is smaller, then we will perhaps move the container and we'll put in BSP Rural, because we now have a BSP Rural strategy. Today we have 10 rural branches. By the end of this year we will have 40 BSP Rural branches around Papua New Guinea, and we hope to have 100 agents around Papua New Guinea. And so the idea with the container branch is we can put one in quickly. In fact, we have 3 being built at the moment, so we have some flexibility. And once we clearly need the community support, because law and order is a massive issue for everyone, all the community, but of course if you're taking 80% of the money around the country, law and order for BSP is one of the things we deal with on a daily basis.
Yeah. That ends another episode of Resource PNG for this week. Hope you join us next week when we feature more stories about resource development in our country. Please remember that if you have any queries, do email us on this address, resourcepng@mtv.com.pg. Well, until then, you have a pleasant evening.